green as we get a sell-off in the indexes, the big ones, the ones that matter, right? S&Ps and NASDAQ more important than the Russell to the market makers, KG. So were they caught off guard by this move?
I don't think the market makers were caught off guard, except for when we hit the 5610 level. That was like the only level today where we actually did see excessive selling, and dealers also were selling into that particular print. So let's kind of just like backtrack and see what actually happened here today. So obviously we had that CPI report. We saw a spike to the upside when it came to the S&P futures contracts, and it actually did hit the 5650 level that we talked about yesterday on the implied open. And then when it opened the market up, that's when we started seeing aggressive selling. But what also occurred there is the fact that a lot of institutional players tried to sell the 5610 puts. And once the market started to sell off and those puts kind of went in the money, that's where we kind of had this domino effect to the downside here. Now that's kind of where we are sitting at around the 5590, 55 area, 80 level. And this is where we're going to try to figure out, do we break up or break to the downside? Now, one thing I will kind of say here, Oliver, if we do see a downside break, we start seeing buyers starting to step in a little bit more, trying to get the market makers off guard, then look at 5570 as being kind of that line in the sand for today, or maybe that target level of the close, if that's going to be the case. The other side of the coin, though, is going to be if buyers of those puts actually get out of those contracts going into the close, and then you have dealers basically taking off those short contracts on the futures, that's where you can have a melt-up scenario. So we can kind of look at this particular chart here today. This is actually the open interest, and really just showing you the fact that yesterday we had a distribution where everything was positive. Today we have something that's a little bit, mixed, but on the downside, it's not as aggressive. We had a lot of institutions really buying puts at around that 5600, 5590, 5600 level. So the sell-off looks bad. Basically what I'm trying to say, it looks bad, but the dealers aren't really offsides if you're looking at it from an open interest standpoint. And that's really what's going to matter at this point. We still have a lot of wiggle room to the upside or downside. On an intraday basis, yes, it looks aggressive, but I would not be too concerned going into the next couple of trading sessions.
Okay, so we'd have to get down to that 55, 45-ish area for there to be some real surprise, some real stress.
Exactly. So to basically put it, the volume right now, we are in negative territory when it comes to gamma. So yes, we are in negative territory. That's more downside action than upside action. That is true. But if you're looking at it from an open interest standpoint, we're still net positive for dealers. And that's really what matters. That matters across their overall portfolio, not just the 0 DTE stuff that's actually happening here today. But when you're looking all the way across the curve for all of the options that they have, net, they are still positive. And so that's why I say you have a little bit more wiggle room to go here, either to the upside or downside. We're not at that threshold yet where we have this dramatic domino effect to the downside. And in fact, if you kind of look at it, we're trading at the lows of yesterday, even maybe say the close of the day before. That's not that bad on a technical standpoint.
Okay. All right. So we're within kind of the bounds. We're still on the highway. We haven't broken off the guardrails yet, but do we now have sort of a force kind of pulling a little bit instead of buffering and helping us to the upside? Have we lost that kind of upside magnetism at all?
Yeah. Yeah, and the fact that the mega cap names are selling off is really going to make it a little bit difficult to get it to the upside here. I mean, last time that I checked, we still had around 75% of S&P 500 stocks still in the green here today, and where you're seeing the IWM really just outperform to the upside. So at the end of the day, if we're going to try to have some positive movement, you're going to need to have those semiconductors. You're going to need to have the technology stocks really kind of maybe retrace some of the losses that they had today. So when you're kind of looking at the underlying structure, it makes it a little bit more difficult for these melt up type of scenarios that we have seen. But when you're looking at it, it's not, once again, I just want to kind of stress it's not that bad, because I'm already seeing people saying, okay, this is the top that everybody wanted to see, buy the rumor, sell the news. And that might have been the event or the equation here. But it's not, we haven't lost too much momentum, even though the chart on an intraday basis may signal that we have.
Okay. All right. Hey, one other thing, KG, nice work there. Good description. The VIX and stocks. I mean, we did kind of literally yesterday, the VIX up, stocks up thing was kind of when you get a little lopsided, kind of when things get a little extreme. So are we normalizing that, fixing it today, or what?
Yeah, we are. Yeah. So if we actually look at a chart, so this is going to be showing the last two trading sessions. Yesterday, we had this movement to the upside, SPX and VIX moving in a one-to-one correlation or close to a one-to-one correlation. And you can see that on that indicator at the bottom. That's just showing a positive correlation is that number moving to the upside, negative correlations moving it to the downside. Normally, 80% of the time, it's moving to the downside. And that's what we have today, a new normalization. And just kind of just highlight here, Oliver, the continuation of the VIX to the upside is not as aggressive as you would think on a sell-off day like this. This is why we were just trying to put this into perspective. This is just showing the fact that the market is starting to balance itself out a little bit. It is starting to kind of regroup itself from the derivative standpoint, and hopefully we start having these normalized correlations moving forward. And so that's kind of what we are seeing to the upside. Now, if we close out the day, the next 15, 20 minutes or so, if we start seeing that VIX moving up and the SPX moving up again, that's when you can signify that we may have another ramp up in the making. I mean, we are seeing some flows going into the 5605s and the 5610s. So they're going to try to ramp this thing up as much as they possibly can. We will get the market on close numbers in about, let's say, 10 minutes or so. And if that market on close number does show a significant imbalance to the upside or a bunch of buy orders coming in for equities, that's where you can kind of get that spark and rally. And that's where you actually can catch the market makers off guard to the upside rather than a downside move. Overall, it does still appear that the close wants to try to stay around 5590 to 5600. That does appear to be the case right now.
All right. Thank you, Mr. Kevin Green. Nice. Good stuff to think about here. VIX up, stocks up.